Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. Hey guys, a very good evening. So here I am with another live trading video. So let's get on to the video first and then we will jump onto the charts where I'll go ahead and explain all the things as to why I took up the trade, what was the technical analysis behind it, and what was the exit point. Okay, so getting on to the video. And before I actually start the video, let me just mention here that in today's video, I have not recorded the entry and the exit points which I made in the trades. Okay, now because I had taken 5 different trades, so it will consume a lot of time if you just see at what point I entered, at what point I exited. So that does not make much sense. Okay, I hope you are getting what I'm saying. Like for example, as you know that while taking an entry, I always make a market order entry, and while exiting, I take the help of the limit order. Okay, now while exiting, I take a lot of time to decide on the price point on which I should be exiting the trade, right? It keeps changing every second because I try to earn the maximum number of points that I can. I always try to maximize my profits when I am booking out a trade. Okay, so that takes a lot of time in the recording. Okay, so I don't think it makes any sense to show you how I am entering the trade and how I am exiting the trade. Rather, what we will do is we will have a look at the order book. From the order book, you will precisely know at what point or what price point I made the entry and at what price point I exited the trade. And I will also show you the net position. So from there, you will come to know what was the profit or the loss that was made in the individual trades. Along with it, you will see the overall profit and loss as well. Okay, I hope you all would agree with that. Now, having that said, let me go ahead and start the video. So I'm just logging in to the to my broker's mobile application, that is Astha Wave, and under the completed tab we have 12 trades. Let me pause the video here. So these are the 5 trades that were taken. Okay, now in total there are 6 trades because Century Tex was traded twice. Okay, as you can see here, once it was traded here and second time it was traded here. Okay, so Century Tex was traded twice. Along with that, I traded on PL, PVR, Tata Motors, and UPL. Okay, so this is the order book. If you want to have a look on the exact price point where I have taken the trade and where I have exited, I would request you to pause the video and take up the information from here. Okay, let's play the video and let's get along. Let's get on to the net position. I just refreshed the order book page. Now we are getting on to the net position page. Yeah, let me pause the video again. So this was the net profit, that is 3,983 rupees and 80 paise was the profit that was uh, booked by me for today. So among the 5 trades, I was in profit in CenturyTex, PEL, and UPL. PVR and Tata Motors were in losses. Please don't worry, I will go ahead and explain each and everything as to why I took the loss and how I took the profit and all those stuffs. Don't worry about that. Just that we need to get onto the charts. Okay, so this is the summary of today's trade. Okay, so as you can see here, PVR and Tata Motors were in red, they were in loss. CenturyTex, PEL, and UPL were on the positive side, which means they were in profit. And the net profit was 3,983 rupees and 80 paise. Okay, now to summarize, the capital that was used for today was again around 80,000 to 85,000, and in each trade I was using around 25 to 27,000. And at a time, since the capital was around 80 to 85,000, at a time I was able to take max to max 2 to 3 trades. Okay, max to max 3 trades, let's say. Okay, so uh, I was not in a position to take 4 or 5 trades at the same time because the capital was not sufficient at all. Okay, so the max number of trades that were being taken at a single time or simultaneously were 2 to 3 trades. Okay, again, the capital was around 80 to 85,000, and the returns that we got for today was around 3,900, which is again very close to 5% of the capital that was used. Okay, so as I always say, making 5% or making 4 to 5% on a regular basis is not a big deal. Okay, the deal is you should be knowing the right thing. Okay, now jumping on to the charts, let me play the video and let it end by itself, and then we will move on to the charts. I'm refreshing the page here. Okay, the net position page, and that is where the video ends. Okay, now let's get on to the chart here real quick. I have already prepared the pictures of all the 5 trades, so let me start one after the other. Okay, so the first trade was Century Tex. Okay, on the charts, the first trade that I'm going to explain is Century Tex. Okay, so as you can see here, the first entry in Century Text was around 10:10 a.m. and the price was around 587.95, and the exit was at 10:23 a.m. The price was 594.45. Okay, so this is the candle where I took the entry. Now, if you have heard me earlier, I always say that you need to wait for a particular candle to close above R1 in order to be sure that a particular resistance has breached, and then you have to take the entry at the next candle. But in this case, what I have done is I have taken the entry at the 10 o'clock candle itself. Now, the question is why? Well, I used another technical which confirmed me that this guy is gonna go up. Okay, now as this is a public channel, okay, I mean YouTube is public, but the technical that I use, I really cannot explain that here because that does not fall under the scope of this video. So what we will do here is I will explain you on a generic basis. Okay, now let's say for example, if you follow the rules, you should not be taking an entry at this candle, at the 10 o'clock candle. You need to wait for the 10 o'clock candle to close, and then you have to take the entry at the 10:15 candle, right? So even if you avoid taking an entry, taking a buy entry at the 10 o'clock candle, it should not bother you because 10:15 candle, the moment it started, you can take the entry at any point. Okay, now the low of this particular of the 10:15 candle is 588.25. But let's say, for example, while you open the app, type in the script name and click on the buy order, it has already moved up till let's say 590 or 591. Then also it is not gonna hurt you because it made a high of 598.80 paise. Let's take it up as 598. So even if you enter at 591 or even 592, you still can book your profits at 597 or 598, which is again a 5 rupees profit, which is again 1% of the script price. So there is no hurting at all. Okay, so this entry that you see on the charts today, that was depending on some other technical that I follow. But you as a trader, if you are learning as to how to make an entry, you should be entering at the 10:15 candle and you should be wrapping up your trade just below R2. A very convenient and easy trade. Now, let's say, for example, you missed this opportunity. Okay, now I had Century Text under my radar, but it might be the case that you don't know that the Century Text has, Century Text is giving the right technicals to go long. Let's say, for example, you have missed seeing Century Text, so obviously you cannot trade it. Okay, now let's say, for example, you did not see this at all. Okay, and you saw it somewhere here, okay, around 10:45 or 11 o'clock. Now here also it gave a good opportunity to trade. If this portion has been missed by you, you again got a got an opportunity at this candle, the 11:15 candle, or at 10:45 candle. And the reason is well known. Okay, just to make it more clearer, again, the 10:30 candle is the one which breached a particular resistance level, that is nothing but R2. So your entry should be initiated at any price at the 10:45 candle, and your stop loss should be put below the swing low. So the recent swing low is this candle's low, the 10:30 candle's low, and the low of the 10:30 candle was 594.10. So put your stop loss at around 594 or 593.90 or 95, anywhere. Okay, so that would be your stop loss. Your entry would be initiated at the 10:45 candle at any price, and then you got the move here. Okay, so in general, if you're learning how to make the right entries, this would be your technical analysis. Okay, this is the way in which you should be understanding the process of making an entry into a trade. Okay, now coming back to my thing. So I took an entry at the 10 o'clock candle, and the exact time was around 10:10, and I wrapped up my trade at at the next candle itself, because R2 was at resistance and I did not want it to take any further risk. So I just booked my profit at 594.45. Okay, again, it is again 1% of the script price, so I was satisfied. Now coming on to the second trade. This trade was a very small trade wherein I was aiming for around 0.5% of the script price. So this is a 500 rupees script, so I was aiming around 2 to 3 rupees. Now I was aiming for 2 to 3 rupees to cover up my losses that I made in PVR. Okay, in PVR I made a loss of around 2200 rupees, I believe, and I wanted to cover it up with this particular trade. So I was trading with 600 quantity, like Century Text. When I traded it for the second time, I was trading it with 600 quantity, and a 3 rupees move would give me around 1800 rupees, which would be very close to covering up that particular loss that I have made in PVR. So the same thing happened. That was the thought process that I had. So at 11:52 a.m. I made an entry at 602.55 rupees, and I exited at 605.85 rupees. Okay, so this was the candle where I made the entry, 11:45 candle, and 12:15 was the candle where I made the exit. Okay, again, as I said, the reason why I did not stay back in this trade was because my whole purpose was to cover the losses that I made in PVR. My purpose was not to wait for this particular script to move up. Okay, but as you can see here, the technicals are the one that matters all the time. So even if I would have stayed back in this trade, I would have got a good profit. So the satisfaction should be that your technicals are working fine. It doesn't depend on what price you book your profits, because everybody will have a different explanation for it. Like my explanation was to cover up my losses in PVR. Somebody else's explanation might be that I'm satisfied with the 0.5% move that I got in the script price. Okay, so different people, different reasons, but the main thing that we should be concentrating, and the main thing for which we should feel happy, is that the technicals are working awesomely. Okay, so that was all about Century Text. Now moving on to the next one, that is PEL. So this trade was taken up at this particular candle, that is the 10 o'clock candle. Again, the very same thing. The resistance, that is R2, was breached at the 9:45 a.m. candle, and then I took the entry immediately in the next candle, that is the 10 o'clock candle, and it took up the entry at 2453.65 rupees. Now remember, guys, that when you are trading a big script like 2400 rupees script is a really big script, and the move that has it has already given was approximately, if you take 2340 to 2460, let's take 100 rupees or 120 rupees. So when I made an entry, it had already given a move of 120 to 130 rupees. So as a trader, we should always apply some common sense that if you are entering a particular trade after such a big move, then you should not target for a 1% move. So you are trading at 2400 rupees script. So 1% of it would be 24 rupees, right? So since it has given such a big move before you took your buy entry, you cannot, it does not make logically it will stand wrong if you aim for 24 points. Rather aim for around 15 points, or maybe max to max 17 to 18 points. Okay, so be on the safe side all the time. Okay, so that was exactly what was there in my mind. So my entry was at 10:08 a.m. and my exit was at 10:34 a.m., that is the 10:30 candle, and the price at which I exited was 2470. Again, very very close to 0.5% of the script price. Okay, so 17 to 18 rupees move I caught, and I was a happy man. Okay, and then if you see, it was completely flat. Ultimately it went up, but the thing is, if I'm already getting a 20 rupees profit in a 2400 rupees script, why do I wait? That is always at the back of my mind. If I'm getting a good profit, why do I lose it? You never know, it will come down. So don't take unnecessary tension. That is all about intraday. If you want to be a good intraday trader, just make sure that you trade without stress. Okay, don't be greedy. You cannot be greedy in intraday trading. Okay, so I came out at this 10:30 candle, and then it was completely sideways, and at 1 o'clock, at 1 p.m. in the afternoon, it spiked up a bit, but I don't care about it because I had already booked my profit and I was very satisfied with that. Okay, so that was all about PEL. Now moving on to PVR. Okay, now PVR, as I said, was in a loss. Okay, so the entry was taken at 10:25 a.m., that is at the 10:15 candle, and the mistake that I did was I did not wait for this particular candle to close. Before this candle closed, I made the entry. Now at one end, that is fine because I use again some other technical which told me that we can go long in this particular trade, so I went long. Okay, but unfortunately it fell down. Okay, it fell down, and since it is a 1400 rupees script, I had a stop loss at around 13 or 14 rupees, and that is exactly where I booked my losses. Okay, so my entry was at the 10:15 candle and I booked my losses at the 11:45 candle. Okay, and as you can see, it tried to breach the resistance again, but it was not able to. Okay, so it was a good decision on my part to come out of the trade having that kind of a loss. Okay, so you should never, another learning, you should never ever hesitate to book a loss. Okay, never hesitate to book a loss. Most of the people, they keep their positions open in such trades hoping that the script price will go up. Okay, but as I always say, hopes and prayers, they never work in the stock market. You trade whatever you see on the chart. If the price is falling, if this particular support level has been breached and the script is falling, it is falling. You cannot hope that it will go up further. Okay, so that is absolutely, I would say, the last resort that you should be having as an intraday trader. Okay, so PVR again was a loss and I booked it gracefully. Okay, next, getting on to UPL. Actually, I booked a profit. So the entry was at this candle, exactly with the same technical explanation. Okay, the entry was at the 10:30 candle, and I booked it out at the 11 o'clock candle. And this is a 700 to 800 rupees script, but I booked out the profits at around 3 rupees. Okay, which is not even 0.5% of the script price. Now, the reason was because I had to go ahead and attend a meeting, and I knew that this guy would go up. I mean, the technicals were suggesting that this will go up. At least it will cover 5%, sorry, 1% of the script price. But since I was in a meeting, I was about to join a meeting, and in that meeting, I had to talk. So I knew that I will not have a chance to have a look on the chart. So that is the very reason why I booked it out at around 2.5 to 3 rupees. Again, the thing which needs to be taken away from this particular trade is that you need to respect your profits. Okay, just because I'm booking 3 rupees in a 700 rupees script, I cannot be rigid on the fact that how can I book 3 rupees when I know that the script can go up. When the technicals are telling that the script will go up, it should not hurt my ego that no, let me attend the meeting and I will see what happens after I come back from the meeting. Now let's say if I would have kept my position open in this trade, and once I finished my meeting, when I came back, if I see that it has fallen down, then that would be more worse, right? I would have felt more bad. So better to book out your profits at 3 to 4 2 to 3 rupees if you know that you are going to get busy with something. Okay, just a moment, guys. Sorry about that. So yeah, that was all about UPL. So my entry was around 793.25, and if I would have stayed back in the trade, I would have surely booked it at around 802 or maybe 803 rupees, which would have been around a 10 rupees move for a 700 rupees script. Okay, but nonetheless, we I was in profit, and that is the satisfaction that I carried ahead. Okay, so this is all about it. Okay, so UPL, and the last one was Tata Motors. Now this guy was absolutely not moving today. Okay, so again the same thing. R2 was breached. This particular resistance level was breached at the 10:15 a.m. candle. So I made an entry at the 10:30 candle. Okay, the price was around 343.30, and then it was completely flat. In between, it gave a small spike at around 344.30 rupees, which is around 1 rupees. Okay, but I was expecting this guy to go up further. I was expecting at least this guy to reach 344.50 or 345, something like that. Okay, but this was too weak. Okay, the volume and volatility was really not sufficient for Tata Motors to pull it up. So I decided to come out of the trade at this particular candle, that is 12:45 candle, and the price at which I came out was 342.75. It was a very small loss that I took. Okay, around 55 paise loss that I took, and that loss was nothing in front of the profit that I had already made. Okay, so as I always say, book your losses gracefully. If you see that a script is struggling to go up, just book your loss and come out of the trade. Save your capital. Now, if I would have been rigid that no, Tata Motors will go up, okay, it's my technical analysis. I know that my technicals are saying that it should go up. Okay, all those things does not work in the stock market. Okay, the technical analysis just gives you an anticipation. What happens on the chart, that is completely on the market's discretion. You cannot force the market to go up. Okay, and as you can see here, I made a good decision by coming out of the trade because later it fell big time. Okay, so that was all about today's trade, and I hope guys that uh, you all understood my thought process. Okay, the thought process that I carried while taking up the trades, and how I decided my entries, and how I decided my exits and all those stuffs. Okay, and I hope again this would contribute something to your learning curve, and you would have got benefited in some way or the other. Okay, and I will try to come up with further trades whenever I get time to record my live trades. I will surely record them and come up with the technical explanation so that you all can learn from here. Okay, thank you so much for all your time and patience. You all have a good day, a very good night. Bye bye.